The broadcast is now starting. All attendees are in listen-only mode.
Thank you so much for attending this webinar on this Friday morning with North American. Just so greatly appreciate it. My name is Sandy Vacanti, and I head up our life division here at IAMS. And again, want to thank you for taking time out of your schedule to attend this webinar. I have a couple things, house cleaning items I want to go over before I hand it over to April Stastny with North American, great friend of IAMS. She'll go over the great products for the Legacy Optimizer single premium life product North American has. So when you refer an agent over to IAMS and that agent gets contracted, we will send you a $50 check just to say thank you for entrusting us with that referral. When that same agent writes and places business with us, you will get 20 basis points off of every piece of placed business from that point on. That is life, annuity, MedSup, long-term care. That does not come out of your commission. It does not come out of their commission. Again, that is a thank you for entrusting us with that referral. What we have for every licensed or contracted agent with IAMS is when you place $100,000 of premium with us, whether that's, again, life, annuity, MedSup, long-term care, combination thereof, we put in $100 in your marketing reimbursement account. And what that is kind of like a savings account that continues to build that you can use for business expenses. So if you have a business expense, whether it's a computer, a seminar, website, whatever that may be, submit that invoice to IAMS and we pay up to 50% of that as long as that much money is in your marketing reimbursement account. We also have something called a new producer builder. So any new agent of ours in your first 6 months of business, or 6 first months of getting contracted with us, I should say, you are eligible to earn a new producer builder. And what that is placing $100,000 in your first 6 months with us. You can choose a 2-year producer website, or you can choose a $750 cash bonus. If you'd like to hold off because you think, gosh, in my first 6 months, I'm going to place $300,000 of business with IAMS, you can choose a $2,000 marketing reimbursement account. You can choose a $1,500 gift card, or you can choose a Social Security program and 3,000-piece mailing. If you'd like to hold off and you think, gosh, I'm going to go gangbusters here in my first 6 months and place $500,000 with IAMS, again, whether that's life, annuity, MedSup, combination thereof, you can choose a 4,000-piece mailing and seminar coaching with a top producer of ours, Dave Pimper, a 5,000-piece mailing and seminar coaching with another great top producer of ours, Matt Gill, or you can choose my favorite, which truly is my favorite, a Ritz-Carlton Travel Rewards package, which you get to plan your own destination. And again, this is coming direct from IAMS. This is not coming out of any commissions from you. This is our way of saying thank you for getting contracted and placing business with us. We also have strong back office support. And how important is that when you're on the road, going on your appointments, trying to make those sales? We're trying to help you work smarter and not necessarily harder on the back end. And how we do that is case design assistance, whether it's running quotes, sending out forms to you, giving you some good top sales expertise and coaching, setting you up on our paperless contract system so you fill out paperwork once and you don't have to fill that paperwork out again to get contracted with any other carriers. And real important in this all is submission to commission. So when you submit that application to IAMS, we scrub that application, make sure we're not missing anything, send it to the carrier the same day, order any exams or labs that are needed that same day, and then we are touching that case every 3 days. May not necessarily mean we're calling you every 3 days. We don't want to be a bother to you, but we are looking over that case every 3 days to make sure it's staying on track, we're not missing anything, and to make sure we get that issued in place so you get your commission just as quickly as possible. We have a strong creative team with Sean and Jacob, whether you're looking for handouts, flyers, newsletters. If you have a logo design and it needs refreshed or you need a logo, great opportunity to get that done. Website, again, if you have one that maybe that's a little tired or you don't have a website, we can create and manage that for you. Online newsletters, social media, gosh, that's so big right now with advertising. So you may see on Facebook all the advertisements there. That's really big. If you can't do that, not familiar on how to do that, we can get that done for you. So can't stress enough to contact Sean and Jacob and our creative team and see how they're able to help you. We also have a strong website, one that they created, of course. Great information. I am in this website every single day. If you call me up and say, gosh, Sandy, I need a quote for term or UL, our IAMS website is where I go to get that, and it's www.iamsinc.com. Again, you can run term, UL quotes, you can pull forms, look at current industry link and news. You can pull our annuity grid and look to see, gosh, what are the top 5 MIGAs out there? What are the top 5 annuities out there for income riders? You can go and look at our webinar schedule, pull up our recorded webinars, and view them. It's a great resource. We have our sales resource library on there, so when you click on that, you can look at little mini videos, whether it's on buy, sell, key man, pull specific forms, whether you're looking for medical questionnaire form on diabetes or heart disease. So great information on our website. Can't stress enough for you to, if you're not registered, to get registered and take a look around and see what we're able to offer. This is a poll question I'm going to send out on our wealth management. So when the DOL ruling came out, we just thought, gosh, don't know what's happening here. Let me go back. Let's see. Sorry about that. So we thought, geez, how do we help our agents retain most of that, if not all of that revenue with that client? So your client doesn't have to go outside of you for any type of business. And what we hope to do with that is increase your revenue with managed money fees. You're able to offer a full range of products and services because you're viewed differently by your clients. You're viewed as a fiduciary. So, with the DOL ruling and then with the, termination of some of its rules, and then this still has not gone away. The DOL ruling has not gone away. By checking yes, you're just asking for additional information. Do you have to have a Series 65? What if you don't want to get that? How do you capture those fees and that revenue without going through the Series 65? We're able to answer those questions for you. So by checking yes, again, we'll get with you, get those questions answered, send out any information that you may want, and make sure that we're able to help you capture that revenue. We also have a Life and Annuity Academy, and actually the last one we had, we partnered with North American, with our friends with North American, and what that is, it's a 2-day training event. This is industry recognized. We're so proud of this academy. We get agents all across the United States, and we pay for everything, whether it's airfare, lodging, meals, and we go over different sales ideas and strategies from top producers across the United States. We go over indexed annuities and what is an indexed annuity, when is a great time to use them, when is a great time to start income or get an income rider. Go over different threats and trends of the industry and how that's going to affect you. client objections and how to overcome them, different turnkey seminar systems, whether you're looking for, an informal seminar with cookies and coffee in a library to your more formal sit-down dinner seminars, and what is best for the area that you're in. Large life case marketing with single premium life, with private financing or that infinite banking. We go over software tools, sales topics. Again, cannot stress enough how great it is to, be able to attend this academy. We choose between 35 and 40. We had close to 1,000 register. Our next one will be in probably February or March. By checking yes, again, you're just asking to get some more additional information, and we'll be happy to get that sent out to you. We also have, in addition to great commission and all the different carriers, incentives, and trips, we here at IAMS also offer a trip for you and a guest, and we call that our marketing summit. So in August 25th through the 29th next year, we are inviting you and a guest to the Ritz-Carlton Travel in Naples, Florida. And in order to get there, you need to be contracted and place business with IAMS. And how you can do that is a combination of $3 million of annuity premium. You can do $1.5 million of Medicare SEP premium. You can do $2.25 million of single premium life, which is a great opportunity to get there with North American. $250,000 of life target premium, or $600,000 of long-term care premium. Again, great opportunity for you and a guest to attend our marketing summit. We have long invitational periods. We want to make sure that we give agents plenty of time to attend. So our invitational period started January 1st of 2018 and went all the way through June 30th of 2019. So there's plenty of time to still get that business in. Again, if you want to attend, the only way you're able to is to make sure you get contracted with IAMS and start placing business. We have something exciting going on right now, and I can't stress enough for you guys to go onto our Facebook page. It's facebook.com/IAMS Inc. And what we're doing, we're having a live drawing today at 1 p.m. Central Standard Time. It's our first Dash for Cash $1,000 weekly giveaway. So the way you can put your name in the hat for this is write $25,000 with Equitrust, whether that's in life or annuity premium. That gives you one chance to win. So if you continue to submit business, every $25,000 gets you an additional chance to win. We have our first drawing again today, and that will be for $3,000. So great opportunity. I'm sorry, for $1,000. So great opportunity for you to kind of see our Facebook page, get excited for this Dash for Cash, be a part of it. Again, only way to have your name in a drawing is write an Equitrust case, whether that's single premium life or annuity premium of $25,000, and we'll get your name entered. Questions about that, please give us a call. We'll be happy to do that. And again, today's a live drawing. It's just kind of a fun way to get involved in that process. And please go to our facebook.com/IAMS Inc. So what I'm going to do now is turn it over to April Stastny. She is her and North American great friend of IAMS. They have such strong single premium life product with their Legacy Optimizer. She is going to go over that with you and let you know the great opportunities that you have with you and your clients for that product. April, if you'd like to take over.
You bet, Sandy. You should be able to view my screen now. Thank you very much. I appreciate the time. I absolutely love our partnership with IAMS, and I'm happy to be presenting to you all today on the Legacy Optimizer. So that's what we're going to discuss today, is this product called the Legacy Optimizer and how it helps clients leverage assets for their heirs while retaining control. So first things first is let's go over line by line our disclosure statement. Just kidding. We'll never go through line by line, but this does apply to the entire presentation. North American, if you are not aware, strong and stable as in A+ ratings with AM Best, S&P, and Fitch. We're the 5th largest writer of individual life insurance in the independent channel, and we're the 10th largest writer of individual life insurance overall. The number one thing I love about North American is our private ownership. We are all employee owners. So this is just something that allows us to be different than the competition out there is our private ownership. I have a question for everyone on the line today. Who do you know that is 50 to 80 years old? Okay? If you can think of someone, use a pen and paper, write down their name right now, not later because you might forget, but right now, who's 50 to 80, they have sufficient retirement resources and emergency funds, and it's 25,000 to 200,000 of these discretionary funds that are in some other low interest account. The goal is that they want to pass on that money as a legacy to their beneficiaries. Here's a little statistic. Over the next several decades, U.S. baby boomers are going to transfer roughly $30 trillion in assets to their Gen X and millennial children. So the size of the market is enormous, right? There are 75 million baby boomers, meaning there's 75 million potential clients. Now, let's talk about what are the concerns of these clients. First, they typically look like this. They have a concern for emergency funds. The frequency of occurrence here is relatively unknown in part because each client has different ideas of what constitutes as an emergency. So this could be as basic as a new transmission for the RV to as traumatic as an expensive terminal illness. A second concern, long-term care, right? Long-term care, and according to longtermcare.gov, once a client reaches age 65, there's a 70% chance they will need some long-term care services at some point in their life. So I'm just going to say that one more time. Once a client reaches age 65, there is a 70% chance that they're going to need some sort of long-term care services. And lastly, we know that this is a for sure 100% chance of death, right? Nobody likes to think about that. I think that's one of the biggest problems in life insurance is we don't want to think about death. But what we do want to think about is how we can help find a solution to the client that has these concerns. So here's the solution. We are talking about a vehicle that can help clients effectively leverage their money sitting in a low interest rate account, effectively give them access to it, but also transfer a larger amount to their beneficiaries. So let's look at a hypothetical. I always like to let's think of I'm going to think of my Aunt Judy. So here's a hypothetical asset allocation for my Aunt Judy. Now, this is looking at a bulk of their assets are dedicated towards retirement income, right? And that's great. We're going to leave those alone. So that's their now money. Then we look at their other assets. This may be something like a portion that are in legacy assets. Now, those are typically in conservative, low-yielding accounts, or these may be reserve or just in case assets. But ultimately, the money that we're talking about is intended for heirs. So we're going to talk about some simple objectives, the solution, and then finally going into a few details on the legacy optimizer. Remember, we're going to come back to my Aunt Judy and I'm going to show you a hypothetical with her. So here's the client objectives, and they're simple. Hope that they will have some money at the end of their lives that they can leave to the family, but they do not want to give access. because they might need it in case of an emergency, a chronic or terminal illness. Now, the challenges that they probably have for some of these legacy assets are that often these types of funds are in low interest rate or low yielding accounts. So they need to also consider the impact of taxes and inflation. Typically, they're looking for risk aversion, limiting exposure to loss, but retaining access to these funds if they need it. Let's take this one step further and look at my bucket here, okay? So my bucket is the client's legacy assets, and it's water that's filling up the bucket, okay? So they're not getting a lot of interest, and I just put a range of 0.5 to 2% interest. So that's the money going into this bucket, their legacy assets. Now, not all of that interest goes towards filling their legacy asset bucket. Taxes are causing some of that to spill out. So 20 to 30% of taxes are coming out. Now, tax rates will vary depending on income levels as well as state taxes. And of course, we're also talking about uncertainty of future tax rates. Okay, now we have a leak in our bucket. Another leak, more money coming out. What is that? It's inflation. Inflation is eating away at the real purchasing power of our legacy assets. The long-term inflation rate is just over 3%. It's 3.22. What does all of this mean, April? It's a good question that I asked myself. So we have a relatively low flow of growth into our legacy asset bucket. We're losing some of that to taxes, and we're losing some of that. The whole thing is subject to the loss of real purchasing power due to inflation. Okay, now this is where we're going to apply some numbers, okay? So my Aunt Judy, and I actually do have an Aunt Judy. This wasn't applying to her, but I do have an Aunt Judy. But here's some numbers. So let's just say that Aunt Judy has $100,000, and she has that somewhere sitting aside. It's for her heirs, maybe me, maybe her children, but that is going to gain her a 1% interest, okay? So there's a focus on safety. It's just gaining $1,000. Now let's assume a future combined federal and state tax rate of 25%, okay? So $250 is lost in taxes. Now that's still a growth. So Aunt Judy can still, on her $100,000, get $100,750. However, what's the last thing that we have a challenge of? Inflation. So in an effort to be conservative and preserve an estate for the heirs, we've actually lost some money on Aunt Judy's $100,000, right? So if you take that $100,750 times an inflation rate of 3.22, now we're at $97,505.85. Okay? Here is something that is eye-opening. Carry that forward just 10 years and look at what happens. Over 10 years, that means $77,679. That is what is lost in purchasing power, starting with Aunt Judy's $100,000. So I have a solution. Yay! Here's the solution. It's a simple one. Here's the solution. This involves a single premium asset transfer into a life insurance product. North Americans. The life insurance product provides several advantages for the policy owner or their beneficiaries. First is the death benefit. The single premium that this client is going to use is going to immediately leverage into a larger death benefit for the beneficiary. Next is cash value growth. We want the potential for the policy to grow in value as well. And finally, the client will want to retain access to the funds, and we'll do that through a variety of liquidity features. So let's look at this in a little bit more detail. So the death benefit, obviously leverage this single premium into a much larger guaranteed death benefit. And I will say this again, guaranteed death benefit. Okay, it's not a non-guaranteed, it's a guaranteed death benefit to age 120. Efficiency. We're going to pass to the beneficiaries an income tax-free and outside of probate. And then lastly is just that room to grow. There's a potential for an even larger death benefit above and beyond the guarantee because of that cash value growth. Now that cash value growth, like I talked about, we're using an indexed universal life policy. This legacy optimizer is a single premium IUL, and so it has the opportunity for cash value growth based upon the movement of an underlying index. Now, we have two choices. We have the S&P 500 annual point-to-point or the S&P 500 with a spread. We also, to help the cash value grow even more, is we have a guaranteed premium bonus, and it's 10%. Now, this is going to be paid over 5 years, starting in year 5. So year 5, 6, 7, 8, and 9, there's a 2% per year. That's a guaranteed premium bonus. Okay? If you have any questions on this, we're going to allow for questions at the end. So just keep those questions in the back of your mind. Now, the last part is liquidity. These clients have access if they should need it. So it can be accessed in several ways. And the first way is we have withdrawals or standard policy loans. So withdrawals can be made in year 2 and beyond, and they are surrender charge penalty free for amounts up to 10% of the account value per year. So I'll say that one more time. I know I kind of talk quickly. Withdrawals made in year 2 and beyond are surrender charge penalty free for amounts up to 10% of the account value per year. Now, I had just mentioned a premium bonus. What we also have is a return of premium. Now, this starts with year 5. So if you stick with it until year 5, that's when even more benefits kick in. This is that it helps provide long-term assurance that the client won't lose money on the product if it's held for 5 years or longer. A prime consideration for many is access to the funds for terminal or chronic illness, and we can do that potentially better than just accessing cash value. We have an accelerated death benefit for those needs, and this can provide an alternative or supplement to an existing long-term care policy. Now, here's a note, this is not long-term care insurance, but rather it's an acceleration of death benefit for certain qualifying conditions. Okay, so let's look at Aunt Judy. My Aunt Judy is 70 years old, female, and she has an account value or an estate value of $475,000. So of that $475,000, $300,000 are in retirement funds. And remember, we're going to leave that alone. We're not touching this $300,000 of retirement funds. But she has $175,000 in discretionary funds. And we've identified those as legacy assets, and it's sitting in a low interest bearing taxable account. Okay? So what we're focusing on in this chart is the green part, the discretionary funds. So what value can the beneficiaries expect perhaps 10 years from now? Here's some different options to compare. This includes a 1% taxable or 2% tax deferred vehicle. And then at the bottom of this chart is our legacy optimizer. Now, it's not likely to find a vehicle with a guaranteed return for 10 years. So 10 years from now, on a guaranteed basis, we're going to assume that Aunt Judy still has her principal of $100,000 for heirs. On the other hand, the legacy optimizer, that would leverage her $100,000 into $165,000 of tax-free death benefit. Remember, I said that's guaranteed. So that's guaranteed death benefit generating a after-tax internal rate of return of 5.1%. So how about a non-guaranteed performance? The 1% solution, assuming a tax rate of 25%, would grow to 107,758. That's the first line. The second, the 2% tax deferred solution, would grow to 121,899. However, that's still below the guaranteed death benefit of the legacy optimizer. Now, remember, we also have cash value growth. So assuming an illustrated rate of 4.23%, the cash value growth buildup would push the death benefit up to $175,393. Obviously, the winning choice, right? Now, here's a graph for chronic illness. I'm not going to go through this line by line. If you'd like a copy of the presentation, I can definitely get this to you. But this is just going over what you could accelerate for chronic illness. And then, additionally, here's what it looks like for a potential 4-year chronic illness in years 7 through 10. But I am going to go back to what would it look like if Aunt Judy took that $100,000, deposited into a single premium product called the Legacy Optimizer. What did we accomplish? Here's our beginning. It's the $475,000 total estate value. We grew that to $540,000. So I hope everyone can see this. Out of her discretionary funds, we took $100,000, we did a single premium into the Legacy Optimizer, got her a death benefit of $165,000. You add that to the $75,000 left over in her discretionary funds, and then add in the $300,000 of her retirement funds that we didn't touch at all. So we grew her total estate value to $540,000. Now here, some of you may be asking a question. I don't really want to go through all the underwriting of a life insurance policy. That's okay, because it is a simple process. Okay, you identify the prospects, you confirm their goals. I'm going to go through this. We already talked about that. Here are their goals. And here's where it's simple. It is a short application. You fill out our electronic application. Then there's a short call to the underwriter. Like while you're with the client, you fill out the e-application, you email it for signatures, you call the underwriter, have a 20-minute call with the underwriter, you hand the phone to the client has the 20-minute call, and then you have a decision. So there's no fluids, there's no medical exam, it is simplified issue. Then premium can be collected, the policy is issued when all of the premiums come in, and it's an enforced policy. Here's my last slide, everyone. Write this down, nalegacy.com. Okay, write it down, nalegacy.com. This is a site, does not require a username, does not require a password. You can go and find all of our consumer approved materials. There's a quote calculator. You can get a quick quote, downloadable brochures and guides, everything you need to know about our Legacy Optimizer, which is our single premium IUL, can be found at nalegacy.com. With that, Sandy, do I have any questions from the audience?
Let's see here, and while we answer some questions, I'd like to put out the last poll question, and that's if you would like to get contracted with North American. So anyone has questions, please let us know. Again, great opportunity to work with an A-rated carrier for single premium life. And just a side note, they have strong products, whether you're looking at term, UL, IUL, and then of course this great single premium life here. Wanted to remind everyone as well that since you have registered for this webinar, you will receive a recorded copy of this. So if you want to relook over any slides, you're more than welcome to do that. Again, you'll get this afternoon, and then I'll personally contact each and every one of you and answer any questions you have, run any quotes that you may need. I think that you did such an amazing job, April, that there aren't any questions.
That's what I like to hear. And one last thing, a question that I have received in the past is for the simplified issue. There is, to qualify, we have a pre-qualifying questionnaire, and it's 10 questions. The first 8 questions all have to be answered no. So, for example, the first one is, in the past 2 years, have you been declined for life insurance? So if that's no, then you continue on. That is available in a guide. It's called the Application Process Guide. It lists all of those questions. So it is a good idea to look at those, and before you would submit an electronic application, make sure you're looking at these questions and that they would be all no to your client. And we can email that out, or you can find that by going to nalegacy.com.
All right. Well, I so greatly appreciate your time, April. Thank you so much. Everyone, I hope you have a safe and wonderful weekend. If I don't speak to any of you before the holidays, happy Thanksgiving. I hope everyone has a safe holiday. Thank you again. Bye-bye.